Hello, good evening, everyone. Welcome to Business Live. Coming up, tax consultant warns not all consumers will immediately benefit from the new VAT reforms being implemented by the Ghana Revenue Authority. We are live with the tax consultant. Also in this bulletin, World Bank identifies Ghana as a frontier economy in domestic debt market development. We'll hear from them shortly. Plus, professional services and auditing firm Deloitte warns excessive reduction in policy rate this year could reverse progress made in controlling inflation. We have details of these and more for you. Please stay on. Thanks so much for your time. I am Pius Kojobaka. I look now at our stories. Some consumers may still not be fully benefiting from the expected relief and price reduction as a result of the new VAT reforms. And that's the warning coming from tax consultant Francis Timoboy. This was after some businesses began reducing prices due to the implementation of the new VAT reforms, while others were here to extend these benefits to consumers. Thankfully, Francis Timoboy joins us via Zoom for us to have this conversation. Francis, pleasure you could make time to join us here on Business Live, and good to see you. Happy New Year to you. What's your...
Thank you.
All right, so what's your independent assessment of compliance with regards to the new VAT reforms? Has the situation improved or there are still some challenges?
So, Pius, between 2nd and today, 5th, we've seen some improvements. As a 2nd, we saw some receipts still bearing COVID-19 levy, even though the government has abolished that. And the justification from those businesses were that they are yet to calibrate their system. But between 2nd and today, I have seen about 4 invoices, which the COVID-19 is no more, which means that those businesses have been able to, delete or remove the COVID-19. Unfortunately, Pius, the price appears to remain the same, and so it raised concern whether in the early period of this implementation, consumers are going to benefit. I mean, I've seen some restaurants charging 200 cedis. Before COVID-19, you could see the receipt there, but today you go and buy, COVID-19 levy is no more, but still the price remains the same. Maybe because they've not been able to fully account for the relief that they got from their input. Now, before they were accounting for the 6% as a cost to them. So their price structure was high. From today or from 1st January, they are supposed to claim that input VAT, and therefore their cost structure is supposed to come down. Potentially, we are not seeing a drastic fall in the prices because they've not been able to fully, get new stocks, which did not have the cost element in them. But overall, we've seen about 4 or 5 invoices, which indicates that prices have, COVID-19 has been deleted from the tax charge. The only unfortunate thing is that the price appears to remain the same. Maybe we'll observe it for a short time to see whether prices will drop, or maybe as Ghanaian attitude will continue to maintain the price, and therefore the benefits will continue to go to businesses instead of consumers.
And exactly, I'm wondering for how long can consumers have to wait on distant prices for them to, reflect in their various purchases of goods, services, etc. Again, we have to ensure that, prices reflect following the deletion of some of these taxes on their books, right?
Yes, like I said, the 1%, some of them have taken it off, but the reason could be, attributable to the fact that they have already incurred 6% cost on the inputs. and therefore, until they get new inputs, which will not include the 6%, they will continue to maintain their price structure. But overall, if you consider such transitional arrangement in fiscal policies like this, it should take us about a month or two for us to see the real changes happening. Like I said, some businesses have changed their systems. We still have some others to saying that it's going to take some time. Even governments themselves at the port, we've not seen the implementation taking place. Yes, we yet to see new imports removing the COVID-19, but it shouldn't take us long. Maximum a month should be enough for businesses to adjust their system so that consumers will see the reduction and then therefore benefit from the relief that the government has granted through the removal of the taxes.
All right, so given this 1 month period, you are looking forward to ensure the full compliance. Between now and that 1 month period, what should the GRA be doing in this instance?
I think GRA should prioritize. They must adopt a balanced approach. We had some session with the general public about on the 2nd, and you could realize that there's still some questions, confusion, especially for the retail community. They still believe that now that they are not, they don't meet the threshold of 750,000, they think that they should automatically not charge VAT. But the GRA clarified that no, it is not automatic deregistration. You cannot stop until sometime when the GRA themselves have, decided to deregister you, or you have to walk to the GRA's office. So more education is needed. We need to embark on more education. But in between the education, GRA should be able to adopt a balanced approach. Companies that have difficulty in changing, I think we should accept. But then we must go on, enforcement so that people will benefit from this relief that the government is granting, whether it is small or not. We should ensure that COVID-19 has been abolished, and I'm not supposed to pay for it. It will be illegal to charge COVID-19.
Government is celebrating this relief, but what will be the real impact on tax collections by the end of the year, you would say?
So, Pius, immediately we will certainly see a very big hit to government revenue. I think the government estimated about 6 billion cedis. But the counter is that we're expecting a rise in compliance. One of the challenges that we have experienced with our VAT system was the cascading effect, and therefore it hindered compliance. So now that we are now having a straight and a simplified VAT system, compliance is expected to rise, and when that rise, will end up widening the base for consumption tax, and therefore in the medium term, government should be able to balance off the revenue that they are losing for 2026 with the enhanced compliance. And I believe that is the best to go, because since 2018 we saw a very decreasing effect of our VAT revenue, and with this in the medium term, I believe that revenue will balance off and compliance will pick up. The challenge is that if we are unable to roll it out and force it properly for compliance to take effect, then that is where we're going to have a big challenge. Then we would have thrown money away.
All right, Francis, for the benefit of education, what should a consumer look out for when they go out to shop?
So consumers look out for, first of all, the COVID-19 levy being taking off your receipt. Of course, you need to demand the receipt, and government has also promised that they are going to, do some lottery. We call it the VAT policing. So you walk to a shop, make sure you collect receipt and check and see whether the COVID-19 has been removed, because it is no more a legal tax that should be collected. If it is there, question it and then receive some explanation for it. If it is genuine, then you take it. But if it is something that could be done easily, then you have to question that you're not supposed to pay COVID-19 levy anymore. So watch out for receipts, and then together with some of questioning of businesses still charging COVID-19, I believe that businesses will be forced to comply. Again, we're expecting a drop in price. So like I said earlier, the ones that we have seen, the price appears to remain the same, but we're watching it over time to see if they are claiming the input VAT, which before was a cost to them. If they're able to claim it, we expect prices to drop. We may not be able to determine how much it should drop, but at least 6% has gone up. So consumers should really see the benefits. Otherwise, we'll rather be enriching businesses instead of consumers. And that would be a missed target.
And Mr. Timoboy, I don't know your thoughts on this. Some have said that the real beneficiaries of these taxes are businesses and not consumers. How true is that assertion?
It's supposed to be both sides because this is a consumption tax. It's supposed to be passed on to consumers. And so, from the business side, before the 6% was a cost to them because it was not allowed as a deductible input tax. So, they were accounting for it as part of their production cost. Today, government says you can come for a refund through the input tax credit system, something which was not there. So, we expect that your production cost will go down. Granted that you maintain the same margin, then the benefit should be passed on to consumers. And so, whilst businesses are going to have a reduced production cost, which will eventually help them expand, consumers will also see a reduction in prices so that they can buy more. So, this put together will. That is what we are saying, that economic activity should be increased. We should see a boom in economic activity. If we don't do that from both sides, then businesses are the only people who are going to benefit. And I think that is not the purpose of what government intended to do. We should see them benefiting by granting them the input tax. Consumers like you and I should also see a reduction in price.
And Francis, I wish I could ask this question to the GRA, but I also feel you are also in the position to give us your thoughts on that, if you may. What's the agreement with businesses so far concerning the new booklet for VAT receipt?
So the GRA is yet to issue a new booklet, especially for the flat rate. You know, in the past, those who were on the flat rate, they were charged. They had a special booklet, which was 3%, and then the 1% COVID-19. So that is supposed to be replaced. So per the public lecture we had, you are supposed to go to the GRA and surrender them to the GRA, and then you collect a new booklet. Of course, we are still trying to roll out the EVAT system, but in between that, you can go for a new booklet. So you're not supposed to you issue the flat rate anymore because that has been abolished. Now, for those who are already using the flat rate, but they may not meet the threshold of 700,000, they are saying that continue to charge until you have been taken off from the GRA system, because today, even though you were 200,000 registered taxpayer, the threshold is 750,000. You are still seen as a registered entity. So you can't sit in the office and say you are not going to charge. Continue to charge until the GRA has removed you from it. So some work is supposed to be, performed by the GRA by redesigning the returns, reprinting new booklets where necessary, and then also trying to roll out the full EVAT system. And you remember, we are also about to, the government is about to roll out the fiscal, electronic devices. All of these things have to be rolled out, but I believe that it will take some time. But in between that one, these are the arrangements that the GRA has announced that should apply to businesses.
Very well. Thank you so much, Francis Timoboy, for your time this moment, speaking to us on Business Life. I'm always glad having you on. Now, let's shift focus to some other stories. The World Bank's International Debt Report 2025 has revealed that Ghana has deepened its reliance on domestic borrowing over the past decade, emerging as one of the low-income frontier economies that successfully expanded its local debt market. We have more for you in this report.
The report says public domestic debt in low-income countries has risen steadily, including in Ghana, as government seeks to reduce exposure to foreign exchange risks and meet growing financing needs. According to the World Bank, domestic debt in these countries more than doubled between 2014 and 2024, rising from 8% to 17% of gross domestic product. Nearly half of the increase occurred before the coronavirus pandemic. Ghana is identified as one of the frontier economies that successfully deepened its domestic debt market. The reports note that Ghana was able to issue local currency bonds with maturities of more than 15 years, helping to reduce refinancing pressure. The World Bank said expanding domestic debt market has allowed countries like Ghana to finance critical development needs while limiting exchange rate risks. However, the report warns that rising domestic debt also brings new risks. While most existing domestic debt is medium to long term, borrowing in 2025 shifted toward a short-term instrument. The report warns that 41% of new domestic debt issued last year was at short maturities, increasing refinancing and interest rate risks.
One of our leading stories, a new report by professional services and auditing firm Deloitte has cautioned that excessive easing of the policy rate could reverse the gains made by the government to tame inflation to the barest minimum. In its West Africa in Focus Assessing Ghana and Nigeria Economists report, Deloitte is positive that growth will remain stronger on the back of enhanced economic policy and inflation targeting. Here's more.
Despite the rate cuts, the interest rate environment remains slightly elevated and has contributed to the strengthening of the cedi and eased inflationary pressures. Meanwhile, other nominal interest rates have dropped sharply. For instance, the 364-day Treasury bill rate fell to 13.06% as of November 2025 from 30.07% a year ago. According to its assessment, while these reductions are anticipated to alleviate financing constraints and stimulate credit and economic demand, excessive easing could risk reversing the progress made in controlling inflation. On the currency front, the cedi is projected to average 13 cedis to the dollar in 2026. However, further loosening of monetary policy could reverse some of these recent gains, particularly if the demand for gold decreases due to a reduction in global uncertainty. Macroeconomic indicators are looking better and stronger in comparison to prior years due to factors including base effects, better policy coordination, and improved external position. Inflation is declining. Local exchange rates are not only stable but also strengthening, while investor sentiment and confidence are improving. But it is not all a rosy picture, as insecurity in the region remains a major concern, especially with Nigeria.
A reminder, you're still watching Business Life. We have more for you after this break. Hello again, welcome back to Business Live. Business owners across the country are calling on government to reduce taxes and review import duties to support the growth of the Ghanaian-owned businesses. Now, speaking to Joy Business, several business operators shared mixed reviews of how businesses performed last year. While some described the period as difficult, others said the year was manageable. Here's more in this report.
As Ghana enters a new business year, entrepreneurs across the country are making stock of how 2025 shaped their operations while setting high expectations for better economic conditions in 2026. For some businesses, the past year came with unforeseen challenges which affected their businesses negatively.
Last year business was not so good though, comparing to the new government and the dollar rates. But we're just hoping this year everything will go on successfully.
2025 wasn't that much of a bad year. Business was on and off, but at least we were able to keep up with it. What really affected the business a lot was the exchange rate. You know, we had to do with the sudden drop of the dollar. The way it fell, we had already purchased cars, paid higher duties, so we had to adjust and then drop our prices so we can keep up with the new cars that are coming.
Despite the challenges, these businesses are still hopeful for a better economic condition in 2026.
We are praying things will be better than last year. And right now, things are coming down. We are praying that everything will be fine. The markets will start going up and everything will be fine. We are praying that everything will be fine.
We are looking for a fruitful new year. The year just started, so we can't just jump to conclusion. So we are giving out our best cars. We are doing sales, hoping to get or attract the right customers. So we look forward to a prosperous year.
Concerning some of the challenges that were faced by business owners in the previous year, they have called upon the government to set regulations pertaining taxation and import duties to help scale their business up this year.
One major thing I would say has to do with the currency. If the government is able to peg the dollar at a rate that would favor us, not go down, but wherever it is, if they're able to stabilize it, it will really help us a lot. Because if the dollar keeps going up and then inflation up and down, it makes it difficult to stabilize our prices.
Our main concern is the VAT, the percentage. Maybe if the person is buying an item which costs like 5,000, the VAT percentage, the person is not willing to pay. And they also insist that we should use the VAT invoices. And also, our challenges too is the clearing. The clearing too is too much. So due to that, it makes our goods go up. People think your things are expensive and so on and so forth.
If government reduce taxes, it will help us. It will help us a lot. Yeah.
We pray that the government will not bring exorbitant taxes. It will bring some flexible taxes so that we the citizens in the business will gain at least some profit, because right now the Chinese are taking over the business from with the citizens.
As 2026 unfolds, businesses are optimistic that with proper regulation and proper taxation, this year is going to be a fruitful year for all Ghanaian businesses. For Joy Business, Sarah Isnam Etiemo reports.
Now, the Bank of Ghana is set to sell up to $1 billion to the market for this month as part of its foreign exchange intermediation program. And this is what Joy Business has picked up from persons with knowledge of the Central Bank's Forex auction initiative. Details in this report.
The Bank of Ghana, in the notice to traders seen by Joy Business, noted that this dollar support should be purely seen as part of its broader intermediation program. It noted that this should help deal with the expected volatility when the needs arises. The central bank is going ahead with this intermediation after selling up to $721 million in December 2025, slightly down from its initial target of $800 million. On the dollar supply for the rest of the year, the Bank of Ghana was quick to add that subsequent monthly intermediation will be guided by prevailing market conditions. The first quarter of this year has always been challenging for the Ghana cedi as businesses demand more dollars to help restock, as well as listed companies and banks trying to settle investors outside the country in terms of dividend payment. Many will be looking forward to see how things will be handled this time round in terms of managing the expected depreciation. According to the Bank of Ghana, the cedi appreciated by some 40% against the dollar for last year. It has even been classified by some international media groups as the fourth best performing currency in Africa.
Thanks so much for watching Business Live for today. I am Pius Kojobaka.